Greetings, Algo artisans. I'm selling all my crypto. Just kidding, just kidding. Is Bitcoin going below 60,000 by Sunday? Are we in a new recession? Maybe, maybe not. Let's jump into the charts and the data right now. Remember, nothing we say is investment advice. Please pause and read this disclaimer. Okay, so we're looking at a Bitcoin chart, and I can tell you right now that price is a bit bearish. Algorithmically, price does want to head down. And just a quick reminder that on this daily chart, which is actually an 18-hour chart, each one of these candles is 18 hours worth of price action, you'll notice that this consolidation, this bouncing back and forth between 60,000, really about 61,000, and 72,000 has been going on since March. We always talk about it in the videos, and it's a pretty consistent thing. However, what's going on right now looks rather bearish, okay? And there's some pretty tough news in the economy this morning, and Bitcoin did some interesting stuff. Bitcoin actually whipsawed, got a lot of people bullish out of nowhere, and then looked like it's going to go ahead and head down after trapping a bunch of bulls. What does that mean? What's a bull trap? A bull trap is when the market fools people into thinking that it's going to go up, so a lot of people buy in, and then it gets all those people and crashes back down, so they get stuck holding the bag. And that looks like that's what happened today. So I can tell you, just looking at this daily chart, that algorithmically things do not look good. There was a chance price might bounce at 63,000, but as I said in my last 2 days of videos, I do expect Bitcoin to head down and at least retest 60,000 or test somewhere in this general area. Now, as price hits this lower area, and I think it will pretty soon, how it reacts to here is going to tell us a lot, because this will be a pretty big move down, and usually these moves down don't occur without some kind of a move back up. Now again, we kind of saw that if we look at the lower time frame. We did kind of see the price move back up, but it got knocked down so quickly it doesn't even look like it did. So let me jump down to the 3-hour time frame. Now in the algos, I can tell you the 3 hours also very bearish, and you can see the move up that I was talking about right here. You can see it happen where price came down last night, and then it popped up real hard yesterday. Midday morning, it popped up real hard and real fast, but then over the next 18 to 20 hours, went ahead, tried to rally again, got knocked down, and got pushed down. So this attempted rally, you can see with this one brown candle here that pushed up, and then it got pushed right back down. That big wick right there that you're looking at, that's your evidence the price is rather bearish after trying to rally back up twice. Okay, so this was an attempted rally. Technically, there is a double bottom here, but this double bottom is not truly complete because I don't see a candle that is higher than this most recent candle that created a double bottom. So we have to always watch out when we see a double bottom. We think, oh, that's going to pop up, that's bullish. Well, this candle that's going on right now, in order for that to be bullish, needs to push back upwards, and it needs to be higher on the high and higher on the close than the preceding candle. We do not see that right now, and like I said before, the algos do not look good on this. This is actually rather bearish. So it looks good if you're a bear, but not for a bull. So I do expect price to slide, and maybe even pretty quickly, down into this area sub 62,500, and maybe start to grab liquidity down from 61,000 or 60,500 area. Now, how it behaves around here is what's going to tell us some clues. It's going to give us some clues as to whether or not price might dump below this multi-month consolidation, and we might see price go down to grab some real liquidity. So what I'm going to do is I'm going to erase these lines. I'm going to erase this older liquidity from this morning because price grabbed some of that, and then I'm going to go ahead and take a look at the Kingfisher to see where all the new liquidity is, so we can have some ideas of where price might want to go. So here's the liquidity. There's a fair amount of liquidity below 59,000, sitting in about 58.7, and really stacked all the way down through the 50s. But you start to see a fair amount of that right at about 58.5, 58.6. So let's go ahead and mark that out, 58.6, and just below, I'm just going to put this rectangle down low because the liquidity just lasts all through the 50s, and that's some pretty tasty liquidity. If the algos are bearish, and they are, then this is a good place for price to go to grab liquidity. It doesn't mean it's going to go there because we have a lot of structure that's sitting in the way at 60,000. Price still has to break below that, and in addition to this liquidity, you have this old price action going from about 53 to 56,000, which was a low. Now, if price did go down to this area, it's always possible the price could hit that 53 to 56,000 to create a high time frame double bottom, and if price were to rally up from that, it would be rather bullish. So price could head down here, but there's also liquidity above price. So let's take a look at that for a bullish scenario. You have liquidity directly above price, but really there's a decent block of it from 65,000 up until about 67,000 60,500. So if the algos were to flip bullish, and right now it does not look like they will, but if they did, price could head up to grab liquidity right here in this area. And this area represents a lot of people who have gone short thinking the price is going to head down. The problem is that they're shorting against structure. They're shorting against a historical area where price continues to bounce, which is about 60,800. So I imagine that as price heads down and starts to come near 60,800, a lot of these will come off and this liquidity probably won't be on there. And in the meantime, the algos are bearish. So chances are price is not going to grab that. Now it could, price could flash up, the bulls could kick in like they did yesterday in a very strong way and push price up. But so far, we're not seeing that right now. So again, I think my final analysis here for the next few days is that price will head down to the lower 60s into the 61,000-ish area or even 60,800, rotate here until it knows what it's going to do. And if it knows what it's going to do, the market is able to push one way or the other. Of course, it might not rotate. It might just go straight down. But I think price is going to be here for a minute, maybe a day, who knows, until the market knows what it's going to do. Now, remember, volatility slows down over the weekend. And we did have some bad jobs data that we're going to take a look at. We have some people theorizing that we're already in a recession. So we're going to take a quick look at that. And if that is the case, then that would also be bearish on almost all risk assets. I don't think that that's quite the way I see it though. So let's go ahead and jump into that. So you can see on here the average hourly earnings, non-farm employment change, and unemployment rate. They were pretty low below the estimates. You have the non-farm employment change a lot lower, 114,000 instead of 176,000 jobs. And that was remarkable. And Zero Hedge came out with an article saying recession triggered, payrolls miss huge, up just 114K as soaring unemployment rate activities activates the SOM rule recession. So this is a specific kind of a recession based on a particular economist. And long story short, there was a big miss. They thought the payrolls would be at about 179,000, and it turns out it's quite a bit lower, something like 60% lower. I'm not sure of the exact math on that, but significantly lower, right? Big miss. And there are a lot of data in this article put together, but what really matters here is why they're saying a recession is in play. And it has to do with a specific measurement. And it says here, but while we have long known the real payrolls number is far worse than reported, what was the true shock in today's data, quote unquote, is the long overdue admission that the U.S. is effectively in a recession because, as the rule named for pro-Biden Kamala socialist Claudia Sahm indicates, a recession has now been triggered. The rule, for those who don't remember, is that a recession is effectively already underway, and it just gives some numbers that have to do with the average unemployment rate over a few months and gets kind of numbery. The point here is that these data are often revised. You'll see these revised up, you see them revised down, and there's a really good chance that this data is going to be revised up. Oh, we were wrong. It was actually 138,000. They can just make these numbers up. The Bureau of Labor Statistics doesn't tell you how they calculate a lot of these things. Like the inflation rate, they don't really give you the formula. They tell you some things about the formula, but these numbers are extremely manipulatable. And my theory is that they want to push the market down, and I mean the SP500 and everything. They want to push it down so that they can push it back up prior to the election. They want to get the market low, because here's one thing that people are not paying attention to, and it's the DXY. So this is the SP500, and I'm going to overlay the DXY, which is the dollar index. And there is a specific pattern we can look at here with the way that the dollar index operates as markets fall and as markets rise. And one thing that happens as markets fall, the DXY tends to go up. And when the DXY stops going up, then the markets start to rise again. You can see this back in 2022 when the SP500 fell and went down and bottomed out in September. And then as soon as the DXY stopped going up, the market started heading back up. And this is essentially reflecting that dollars have gotten cheaper, at least in comparison to other currencies. You can see the same thing here in this flash crash in 2020 when we had the pandemic crash. Dixie kept going higher and higher. And as soon as the DXY stopped heading up at the peak of this orange right here, you saw the rest of the market head up like this, right? As soon as the Dixie started going down. So one could infer that that means that when the money gets cheaper, that's when you start to see a rise after a major drop in the markets. And what's happening right now is that the DXY is actually getting weaker right now. So it isn't like it's peaking out as it normally would be in one of these drops. Like look at this drop, even just going back to 2023, the DXY was headed up and then it started to go down and the rest of the market started to head up, right? But here, the DXY is headed down at the same time, which is a very interesting look because that's not normal. And what normally is going on is the Dixie and the market are kind of operating during volatile events in an inverse correlative manner. Okay, what does that mean? That means that when the DXY is rising, markets usually are falling, and when the DXY is falling, the markets start to rise, and this is not normal. These are both falling at the same time, and that tells me that there's a really good chance they're gearing up to push the market ever higher so that they can get into the election looking good, right? The incumbent party say, oh, the economy looks great, the stock market is good. Well, it's kind of hard to push things up if the markets have not been allowed to fall, right? You need to kind of let markets compress a little bit so there's room to actually go up. So that's the machinations here. So no, I don't think we're in a recession. I think that this data was allowed to look bad, to cause people to want to sell out of the market, to cause the market to want to fall. I think all the usual things that they're doing to keep the market from falling are being allowed to lapse over so that the market is allowed to compress for a time. I imagine that the word is in, and a lot of very smart people are short right now making money on this move down, and I'm pretty sure that we're going to see the move back up maybe in a few weeks. I'm not sure exactly when, maybe when the summer is over, but you're going to see the DXY probably continue down, and then this is going to start heading back up. And I bet you by maybe September, October, we're going to see new all-time highs in the market, if not sooner. So that's my theory. We're going to see how it plays out, but that is all we have time for today. I hope this video was helpful. Please come over to algofactory.tech. We teach people how to build their own trading method, otherwise known as an algorithm. You don't have to know how to code, but if you do code, we can put you on the path to where you can build something that trades for you while you're not at the computer. If you just want to trade manually, which is what most people are doing, then that is, of course, something that we can help you do and help you have the capability to possibly extract money out of these markets on a regular basis. And while we do focus on crypto for a lot of these videos, I'm actually primarily a Forex trader, and you got to know that crypto doesn't go forever. It goes for about a year and a half, and then for a couple of years, there's not much going on in crypto. And if you want to be a trader, you're going to want to understand how to really trade, how to put on those big boy pants, because what's going to happen is eventually crypto's going to flatten out, and the meme coins aren't going to be what they used to be, most likely. I've seen it enough times. I've been in this game since 2017. I don't expect that to change. So come on over, learn how to trade. As a matter of fact, we got some pretty happy customers who are already down the path of success in their algo building. Let's hear from one of those right now.
Hey guys. So I've been in Algo Factory for around 10 months now. I held crypto, but I hadn't traded crypto or Forex before. Since joining, I've learned a massive amount that I use almost daily for trading, reading charts, using indicators, and understanding different aspects of the market. So I found the course incredibly easy to follow, and the interactive style of teaching is incredibly beneficial. So now that I'm comfortable in my trading ability, I'm starting to invest more capital, and projections are looking very promising. My goal is to be trading full time in the future, which I believe is highly achievable. I've met an amazing community of like-minded people and made some great friends. In my opinion, both V and Cowboy go above and beyond, and I highly recommend joining Algo Factory. Thanks for everything, legends. Cheers.
Algofactory.tech. Trade your job, upgrade your life, and we'll see you on the next one.